Welcome back to Multibagger Shares, the value investing education platform trusted by thousands of Indian investors. I am Manish Goel, SEBI registered research analyst, and today I am going to tell you a story that will change the way you think about wealth creation in the Indian stock market forever. On the 16th of March 2007, a small Bangalore-based innerwear company called Page Industries listed on the BSE and NSE at an IPO price of 360 rupees per share. There was no hysteria, no television debate, no celebrity endorsement. Most retail investors in India did not even know what jockey was. It was a premium product for the urban elite. Fast forward to today, the 10th of April 2026. The same Page Industries share trades at approximately 33,940 rupees. A retail investor who put just 1 lakh rupees in the IPO and never sold would today be sitting on a portfolio worth roughly 94 lakh rupees. That is a 94 bagger over 19 years. An annualized return of about 26%. And this is before counting the generous dividends Page Industries has paid out almost every single year. Now, contrast this with the brutal reality of futures and options trading. According to a SEBI study, 9 out of 10 individual traders in the equity F&O segment lose money. Not 5 out of 10. 9 out of 10. 90% of intelligent, hardworking Indians are losing their hard-earned savings chasing quick gains in derivatives. While the patient owner of a single quality business has turned 1 lakh into nearly 1 crore by simply doing nothing for 19 years. Let me decode why Page Industries became such a legendary compounding machine. There are 5 core qualities that every multibagger of the future will share. And these are the exact filters we apply in our 95-factor research framework at Multibagger Shares. First, a permanent brand moat. The Genomal family secured the perpetual exclusive license to manufacture and distribute the jockey brand across India, Sri Lanka, Bangladesh, Nepal, and the UAE. This is a structural moat that no competitor can replicate, no matter how much capital they raise. Second, secular category growth. India's branded innerwear market has grown at 12 to 15% CAGR for 15 years. Far ahead of GDP. Page Industries simply rode this wave with disciplined execution. Third, extraordinary return on capital employed. In its best years, Page Industries generated ROAS of 45 to 55%. Very few Indian listed companies can match this. It means every rupee of capital deployed inside the business produced enormous returns without needing to raise fresh equity or debt. Fourth, consistent shareholder-friendly capital allocation. Unlike many growth stories that hoard cash, Page Industries paid out generous dividends almost every single year. This is itself a signal of management quality. Fifth, founder-led execution with skin in the game. The Genomal family retained substantial promoter holding and stayed deeply involved in the business for decades. When founders have their own wealth tied to the outcome, decisions are made for the long run. Now, here is the most important lesson. The Page Industries story is not just about identifying a good business. It is about the discipline to hold for 19 years through every crisis. The 2008 global financial crisis, the 2013 taper tantrum, the 2020 COVID crash, and the 2025 geopolitical shocks. The vast majority of investors who bought Page Industries in 2007 sold within 5 years, locking in a modest 2 to 5 bagger and missing the explosive compounding that came afterwards. Why did they sell? Because of behavioral biases, anchoring, recency bias, loss aversion, the constant temptation to book profits. Every time Page Industries crossed a new milestone, voices on television and WhatsApp groups screamed that it was overvalued. Most people listened. The ones who ignored the noise became crorepati's. This is why behavioral discipline is the single most valuable skill in investing. It is harder to develop than technical analysis or financial modeling, but it pays exponentially more. Now let me give you a contemporary parallel. Consider Titan Biotech Limited, BSE code 524717. Currently trading at approximately 432 rupees per share with a market capitalization of around 1,783 crore rupees. Titan Biotech displays the same quality signature that Page Industries had in 2007. Promoter holding rising from 48% to 55.87%. Zero pledged shares. Consistent export revenue to over 100 countries. ROAS of nearly 17%. And a clean balance sheet. Whether it becomes a 94-bagger over the next 19 years is impossible to predict. But the underlying quality fingerprint is unmistakable. Today as I record this, the BSE Sensex is at 77,405. Up over 1%. The Nifty 50 is at 24,009. Also up nearly 1%. These daily moves do not matter. What matters is owning quality businesses and holding them through decades. The single most important takeaway from the Page Industries story is this. Wide diversification is the enemy of outstanding returns. Warren Buffett said it best. Wide diversification is only required when investors do not understand what they are doing. The investor who turned 1 lakh into 94 lakh did not own 50 stocks. He owned one position. Concentration combined with deep research and patience is the formula for generational wealth. If this video has inspired you, please subscribe to our channel. Hit the bell icon. And share this with every Indian investor you know who is wasting their life on F&O trading. Let us together stop the gambling epidemic and start building real wealth through quality value investing. This is Manish Goel from Multibagger Shares signing off. Remember, quality plus patience plus concentration equals wealth. See you in the next video.